Hello, everybody. My name is Alex Glaser of the Glaser Group with Long and Foster Realtors. Today, I wanted to talk with, in my opinion, the best lender in town, maybe the whole world. Philip Coon is the branch manager at C&F Mortgage here in Richmond. Hello, Philip. Thank you for joining me here today.
Hey, Alex, thank you for having me on.
So I had a lot of questions and I figured let's just record it because I'm sure other people are having the same questions. Some I know the answers to already, but I'm just going to reiterate it because I kind of want to give the full idea of like what's changing and what's going on right now in the mortgage world, the mortgage side of real estate.
Sure.
So first and foremost, interest rates are really low, like really, really low. If you want to talk a little bit about that.
They are. We have seen, about a month and a half ago, they had hit rock bottom. They were around 3% for a conventional 30-year fixed with good credit. And then COVID-19 happened, and we saw quite a bit of volatility. Rates jumped up right at first when everything first started happening, and they started shutting, the states down. We saw a lot of volatility. Stock market was up and down, and rates jumped up. Okay, and so they've come back down quite nicely, basically back to where they were. I mean, it's right around 3% for a 30-year fixed rate, good credit right now. So, it's historic low rates. It's most borrowers probably will not borrow money at a cheaper rate in their life, but who knows? I mean, I've read some things that they think rates are going to go back up, and I've also read several things where they think rates could keep going down into the summer. So who knows? I mean,
there's not much room for them to go down.
Well, I mean, yeah, it's
a little bit.
Who knows?
Guess, but...
Yeah, I mean, I've read some articles where they think that by July and August that we could see a 30-year fixed rate below 3%. So I guess we'll see. Time will tell. No one has a crystal ball, but we're doing a lot of purchases still, a lot of refinances, and so money's cheap. It's a good time to borrow for a mortgage.
So, what else has changed because of COVID? I know some of the things, but if you want to just share in general, I know it's not going to be the same for every person because different people are going to get different loan types and different investors have different rules, but just some general things that have changed, if you want to kind of hit on some of those.
Yeah, so government pricing right now, government loans has probably been impacted the most. And
that'd be FHA, VA, USDA.
Correct, yep. FHA, VA, USDA. Those are they allow lower credit scores,
or
higher debt to income.
They allow lower
traditionally lower credit. They allow lower credit scores traditionally, higher debt to income ratios traditionally, minus the USDA. Really, FHA and VA allow higher debt to income ratios, but government loans have taken a bigger hit, and I think the reason is because they are just more risky. Lower down payments, lower credit tier requirements. So right now, what we're seeing is you have, I guess a good thing for me to do is probably break down kind of what's going on and why we're seeing some of the things we're seeing. You have me at C&F Mortgage. We're a correspondent lender, and what that means is we're like a broker except better, because what we do is we can shop around over a dozen different large investors such as Wells Fargo, SunTrust. Those are like our big bank investors. We also have a lot of non-bank investors like PennyMac, Mr. Cooper, Franklin American. Okay, so to break that down, you have some mortgage investors that will do they'll do loans for people, but they're not backed by a bank, meaning, like I said, they're non-bank investors. Whereas you also have several like SunTrust, Wells Fargo. They do mortgages, but they also do all sorts of other stuff because they're a bank. They do home equity lines, car loans, you name it. They have checking and savings accounts. They have a lot of capital, a lot of deposits. So right now, what you're seeing is a lot of the non-bank investors are more worried, and the reason is because at the end of the day, when we lock a loan in with this investor, okay, the investor is they're the servicer. So what they do is they service the loan, meaning that the client makes their payment and they make the payment to that investor that I locked the loan in. Okay. Now, ultimately, at the end of the entire transaction, you have a bondholder. The bondholder has bought these mortgage-backed securities. Okay, and so when we do a loan, these investors they'll bundle 20, 30, 40, 50, even more loans together and sell it to these bondholders at the end. And that is what's called, like I said, that mortgage-backed security. So what's been happening is the government is giving forbearance to borrowers. Okay, so a borrower comes and gets a loan. Well, then the government announced a month or two ago that, hey, we'll give you guys forbearance on not having to pay your mortgage payment. Okay, for 1 month, 2 months, 3 months, whatever it may be. All right. So now the borrower is not, some borrowers, if they ask for forbearance, they're not paying the servicer, that investor that I locked it in with. Okay, but on the back end, the bondholder that bought the mortgage-backed securities, they still are expecting payment from the investor. Okay, so right now these investors are bleeding because they're still having to pay the bondholder at the end of the line. Okay, whereas the investor is not getting any money coming in from the borrower because they have asked for forbearance. So the big banks, they can handle this for a while because they're very liquid. They have a lot of capital. They're massive, right? So they can, I guess, bleed for a while, okay? Whereas these non-bank investors, like I said, Penny Mac, Mr. Cooper, Franklin American, all right, these non-bank investors that aren't massive, that aren't liquid like these big banks are, they can't bleed but for so long before it shuts them down. They have money going out to pay the bondholder, but right now they have so many borrowers asking for forbearance, so they don't have money coming in. And so it's only a matter of time before that no longer works and those people go out of business. So that's a major issue that we're seeing. So
I know this is very much speculation, but hopefully, like the government stepping in with small business loans, like what happened back in 2008. I'm not going to get too much into it, but like the big banks were bailed out by the government. Some people weren't happy about it, but like I feel like that was kind of the bank's fault, and this is not. So hopefully, for like some of those smaller investors, the government.
Well, at that time, lending was very loose, and so
I'm noticing.
Right.
It's like if you're not familiar with what we're talking about, it's probably like flying over people's head because there's a lot of words and acronyms. So just kind of like, what the heck are they talking about? There's just a lot of variables to getting a mortgage in all of this. And that's why we have professionals like Philip that we can go to, and he can kind of explain and point us in the right direction, make it a little bit more simple, but he is getting very deep into like the belly of the financial beast in his explanations.
Yeah, and I know, I just wanted to explain and kind of tell you what's going on.
Well, no, like I didn't know that Mr. Cooper could be in trouble right now, because so this I'm learning a little bit as well, so I do appreciate it. But for like the average mortgage borrower, we may get a little technical, but at the end of the day, if you have questions, the easiest thing is just to call Philip, because every situation, your credit score and how much down payment and debt, like there's just so many variables. It's all just kind of guessing until you talk to someone who knows what they're doing and they can put it all together and then explain it just for you. But if you want to, I just kind of wanted to plug that in for people watching.
Yeah, no, and long story short, what I was getting at is because of all that volatility, because of all that uncertainty, the riskier loans, the FHA loans, like the VA that's 100% financing or USDA that's 100% financing, these riskier loans, because of all that volatility going on, these riskier loans are the guidelines are changing. Across the board, Wells Fargo and SunTrust both announced minimum 680 credit scores. Now, a lot of investors have loosened that back up a little bit, but there's still several investors that are now saying minimum 680 when a month or two ago, Alex, I was doing, we had a couple investors that would go down to a 580. So when you see things change that quickly and that extreme, something's going on. So, until the forbearance part goes away, I think you're going to see these riskier loans or more volatile loans not be as common. Right now we're doing a ton of conventional loans. Conventional still unbelievably strong pricing. Like I said, 3% rate conventional loan. If you have good credit, you're seeing these good rates for FHA as well. But if you're 640 credit score FHA right now, the pricing is not very good right now. So,
and one,
like I said,
I feel like I'm surprised is still around is like I'll still have clients reach out to me and be like, I want to buy a house, but I don't have 20% down. Like even before COVID started 2 months ago, I'm like, no, like I don't know how that became such like a thing where everyone thought you had to have 20% and you couldn't buy a house, but like you have 3% commission.
Yeah, I get that.
Right.
I get that a lot. Yeah, if you are if at least a loan as a first-time home buyer, you can do a 3% conventional loan. Otherwise, if you're both, if neither of you are first-time home buyers, then it's a 5% conventional loan. But I get that all the time where people think they have to put 20% down. It's just so far from the truth. We have several different 100% financing options. VHDA is Virginia Housing Development Authority. We're one of the number one lenders in the state for VHDA. We do a ton of VHDA, a ton of first-time homebuyer loans at CNF, and VHDA is they have they have 100% financing options. You could also do a USDA loan, 100% financing, which is if you're buying in a rural area. Powhatan County, New Kent, Goochland,
even parts of Chesterfield qualify, and then
very few, but you're right.
Available as well for people.
Yeah, we can still do grant loans through VHDA. So great options as far as getting some free down payment money. There's a lot of really good options out there that don't require 20%. I guess the common misunderstanding is there's PMI on a loan, and PMI is private mortgage insurance, and there's PMI is required if you do not put 20% or more down. So I guess that's probably where a lot of people think that you have to put 20% down. You can do less than 20. You're just going to have PMI on the loan. So it's just all that is it's
like your payment would be a little more expensive, but Philip could tell you, well, your payment if you buy this house this way would be this amount, and if you're comfortable and you can afford it,
correct.
It is a tool to help you get into a house for less of a down payment as long as you can afford the monthly payment.
Absolutely.
It's a win-win.
Right. Yep. Absolutely. Yep. You got it.
So I guess because of all the different variables and what's going on, kind of what I said earlier, if you're not sure if you qualify for a loan, either because of credit score, down payment amounts, you might. You very much might. I've had clients call me. I remember it was like last week. She's like, I don't think I can afford, but I want to find out. And you got her qualified. So if you're unsure, it doesn't hurt to call and at least go through the process. And if you can't qualify, I know, Philip, you've helped a lot of clients, guide them in the right direction so they can get qualified. And
that's a big part of my job. There's a lot of clients that call me and, for whatever reason, they're not quite ready to buy, whether it be debt to income ratio is just a little too high, and we have to work on, I can say, hey, if you pay this off or pay that down, we can get you qualified. Credit too. I have a lot of clients calling me, they're borderline credit. I can run a credit analyzer, and I can tell them if there's potential score improvement and exactly what to do to get those points back on your credit report, whether it be paying a revolving credit card down to 30% usage, or paying off this collection, or whatever it may be. We can run the credit analyzer and help people get back on track. So I spend a lot of time where I'll work on a client and it may not be right then and there, but we work with them, get them in the right direction, guide them and coach them through. And then, 1, 2, 3 months down the road, we get them in a home. And so, some clients take a little longer than others. And, there's some clients that, it just depends. There's so many different variables in the mortgage process these days. But, that's our job. That's what we're here to do, is to look at the whole picture, guide you through, figure out what's the best option, and get you into a home.
And kind of another reason I like CNF as a correspondent lender is because you have so many options I feel like, and then you're not directly tied to those investors, that you're looking out for the client's best interest. You're not just trying to sell them a certain loan because you'll get paid a certain amount. Like you're really trying to fit what makes the most sense for them and help them get that, give them great service. Everything at CNF is done in-house until closing. And then you may end up sending your mortgage payment to Wells Fargo, but the whole mortgage experience is amazing. And that's why I like recommending you guys.
Correct. Well, thank you very much, Alex. We appreciate that. I mean, yeah, just to reiterate that a little bit, when I was explaining it about 5 minutes ago, the word correspondent lender, what that means is, I said we're like a broker, but better. And a broker and us, we have the same ability to shop all these different investors, okay? Now, what we do differently than a broker is we originate, we process, we underwrite, we close the loan in-house, meaning that the loan file stays with my team at my company the entire time from start to finish until closing. And then after closing, it transfers to the end servicer at that point, who you will be making your mortgage payment to, whether it be, like you said, Wells Fargo. Whereas the way a broker works is they can shop around as well, just like we can, but they send it off to that investor that they lock it in with, and that investor actually processes it, underwrites it. And so the broker loses control. The ball gets passed, I guess you could say. And like I said, whereas with me, we keep our service level. I mean, that is what we pride ourselves in. At CNF, we're a hometown mortgage company. We lend up and down the East Coast, but I do majority of my business right here in the Richmond area, surrounding counties. But at the end of the day, I mean, we do probably too much due diligence up front. I make sure that we dot our I's and cross our T's before we send that pre-qual letter out, because the last thing I want to do is waste your time, waste the other agent's time, waste the client's time. There's money involved. Clients get under contract, they're going to pay for, normally a home inspection, an appraisal. So if I write a pre-qual letter and something goes wrong because I didn't do my job right, I've wasted time and money. So we take it very seriously, and we really pride ourselves in delivering just a all around, as smooth as possible experience from start to finish.
And so we've both been in the business about 10 years now. I didn't bump into you until like year 1 or 2, but as someone who focuses primarily on the listings, like I'm getting buyers with lenders all over the place, local ones, out of state, internet ones. And I've seen from the best of the best to like the, oh my God, worst of the worst. And like other realtors in the community, like banks, they have a reputation of either doing a good job or a not so good job. And I've definitely, I remember Joseph, my buyer's agent, he got those multiple offers and they picked our offer because CNF was the lender versus some out of state lender. So, that's a great bank. There's a lot of benefits. There's more than you probably even realize, like just their reputation within the realtor community can give you an edge if you're competing for a house. Like we've seen it firsthand.
Yeah, I appreciate you saying that, because that has happened several times where we've been in a competing offer situation, and the other agent takes our offer because we're a local bank, or they happen to know CNF, or they happen to know me personally and know that we get it done, and when we write a letter, we stand behind it. So that is important. I mean, there's always going to be someone there's going to be some internet lender, some broker who, doesn't have the overhead and isn't set up the way we are to deliver service. If you go online, I'm sure at any given point, there's going to be, someone out there that might be able to beat me, but I promise you this, I'm going to be darn close. How many times have I lost a client of yours, Alex, when they go somewhere else?
Really rare. And most of the time, halfway through the process, they tell me they regret it.
They regret it. Yeah. Right. They regret it. There might be someone that beats me by an eighth in rate. All right. Let's say on a $200,000 house, that's equivalent to $15 a month. I get it. $15 a month is $15 a month. But at the end of the day, if you have an awful product.
One lunch.
Right. A month. But I get it. It adds up. It adds up over time. But, if someone beats me by an eighth in rate, but you have an awful experience, you miss closing dates, you happen to, get it delayed, and you have to now pay extension fees. Was it really better? No. So,
I've seen lenders change stuff like a week before closing, add in all these like hidden fees that now are not hidden, but like you're a week from closing. You can't just say, I'm going to go find another lender. Like you're kind of stuck. And I've seen people get screwed over, and it makes me very upset, but I can't do anything about it. Like I can recommend people and guide people, but they make their own decisions, and that's why a lot of people regret it. But sometimes you got to learn the hard way. But I know whether it's you or any of our other vendors, like I have 10 years of experience, almost 700 families we've helped move. Learn from me and my clients' experiences, so you don't have to experiment and see if you're going to have a good one or not.
Right.
But ultimately, it's your decision. But I know if you go with CNF or any of our preferred vendors, you're going to have a good experience. Like we've pretty much tried everyone in town at this point. So,
well, we appreciate that, man. You know how much we value the relationship. I mean, we go above and beyond for our agents and our clients. That's what keeps us going. We, like I said, at the end of the day, man, you guys, the Glaser Group, I mean, y'all are top notch. I mean, I work with so many agents, and I work with a lot of great agents, but I mean, I know at the end of the day, you guys are just a class act. You go above and beyond for your clients. You have so many great things to offer, such as, the moving truck. How cool is that? You have a moving van and a moving truck. So when people buy a home, you guys offer a free service that they can use a moving truck. I mean, there's like maybe one or two other agents in town that offer that, but I mean, how cool is that? I mean, that's such a great added bonus. But that's just one of the little things. When you guys are very thorough. You go above and beyond for your clients. So that's why I'm honored and very blessed to be partnered with you guys, because I know y'all are true professionals, and not only are you good at what you do, but you offer a lot of cool stuff, and you have a lot of cool partners too. So that
I'm sad we're not going to probably have a client party this year. Like it probably just will be pushed in. And we normally do 4 a year, a bunch of like small micro events for our clients, and I don't know.
Well, hopefully things will loosen back up, and maybe come fall, maybe we can put them together again. But who knows? That's wishful thinking.
I'm just going to the Taza with you.
I know the CNF cafeteria. We call it the CNF cafeteria because it's right just within walking distance of our office, and happens to be one of our favorite restaurants in town. So we spend a lot of time and money at. Yeah, so it's definitely
anyone who's watching is wondering, like, is this a good time to buy a house or not? Again, there's a lot of variables, depending on you and your specific goals. But in general, interest rates are low. I would say anyone who's listing a house, during a pandemic, typically is pretty motivated to move. They may not give the house away, but I have some clients that aren't in a rush who are waiting. So the people that are listed for sale right now, they may be a little more flexible, potentially, on price or during home inspections. So I think there is a lot of opportunity to consider moving now. And then the biggest thing is, like, when you compare buying versus renting, it's almost a no-brainer. Like, you can get a house that's bigger and nicer than what you're renting, and you're paying less in month, like, versus your rent.
Oh yeah, absolutely. I mean, I people come to me all the time who get pre-qualified, and they're like, I'm paying $1,200 a month rent for a 2-bedroom apartment, and by the time I get them pre-qualified for a $200,000 house with its 3-bed, 2-bath with a backyard, they're right at the same price, and they're blown away that they didn't realize that what they've been paying and what they've been able to afford can get them a nice home with more space, and so I mean, but most of the time when a client comes to me, they're usually paying more in rent than what their mortgage payment ends up being. So they're pleasantly surprised when I get them pre-qualified, and it actually reduces what they're paying a month, and they get a home. And not to mention, when you're paying rent, you're literally paying the landlord's mortgage for them, building them equity. Whereas when you buy, it's an investment. Your house can appreciate. You can also put sweat equity into your house and fix it up and gain value that way. And so, not to mention, you get a great tax write-off. You can write off your mortgage interest on your tax return. So there's so many good reasons of why you should buy. With rates being so cheap, I encourage people to buy or refinance right now, because it is some of the cheapest money we'll probably see, 10, 15 years ago, rates were, 6, 7, 8%. You go back 25 years ago, rates were 12, 13%. It's to think about that, and now we're hovering around 3% mark for a conventional loan. It's crazy. It's great, but it's hard to believe that it's interest rates are that low right now. So
it's almost like a pet peeve of mine. Like, so rates change. They go up and down a little bit all the time.
Sure, every single day.
Like
Pricing changes every day.
Because it's probably like a little over a year ago, rates were at 4.5, and people are like, "Oh, rates are high," and I'm like, "No, they're very low. You're spoiled." A couple
They've
years
been
ago,
spoiled for so long. Yeah.
20 years ago, they were 18%. Like, you got to put things in perspective for people. But
right, exactly.
By the low rates.
The younger generation that have only been paying attention. Well, they've been paying attention for maybe only 5, 6, 7 years. They've only seen rates in the. I guess what did you say? We've been in it. I got in May of 2009, so I just hit year 11, and ever since I've been in the
August 2009, say right around the same time.
So yeah, you and I both got it around the same time. So you're about to hit your 11-year mark. I just hit mine, and ever since I've been in the business, Alex, I haven't seen rates vary, but only so much. I've seen basically over 11 years. I've seen about the low of the lows around 3%, okay, for a conventional loan, and up to around 5, maybe just a tick over 5%. About I guess a year and a half ago, what would that be? The end of 18, going into 19, we saw rates tick up around 5 at the end of 18. So, in 11 years to see only about a 2-point swing is that's not much. It's even 5% still cheap in my opinion. But like you said, when people for 5 or 6, 7 years have seen 3 to 4% range, they think 5 is high. But historically speaking, still
traditionally,
really
interest rates go up when the economy is good. And the economy has been really good, and I was expecting rates to go up more than they did, like back in, I guess it was like late 18 when they were in the upper 4s. Like, still phenomenal. There's a lot of variables that go into mortgage rates changing that I can't explain. He would be able to do a little better. We don't need to get into that now, but
well, that's a whole nother podcast or a whole nother So
we could talk about it for hours and hours and hours, and probably
and we could talk about it.
People that would care to listen would probably be other realtors, because most people that are trying to buy a house, like, what I would recommend is learn as much as you feel comfortable that you want to learn or need to learn, but then lean on the professional, whether it be on the mortgage process or the home buying process. I could school you for days on all the little nuances and variables with buying a house. You may not want or care to know all that stuff. Like,
sure, that's right.
Answer your questions, teach you what you want to learn, and then we'll handle the rest. But I'm always happy to share and answer questions, because that's how you get happy and comfortable clients to use you and then refer you.
Yeah, that's exactly right. You and I have been working together for a long time, and we've had a heck of a run, man. We've helped a lot of families. It's just very gratifying to help people. For most of these people, it's the biggest transaction of their entire life. Buying a home, and so you and I both. For
anybody, because it's a lot of work. It's not cheap to do.
It's very stressful. It's a stressful time. It doesn't matter if you've done it once, twice, 3, 4, 5 times. Every single time you do it, it's stressful, just because there's just a lot of moving parts with it. And so, you and I both, I think a lot of our success is that, we take it very seriously, and we, from start to finish.
This isn't a hobby. We're not.
Yeah, no. No, heck no. If anything, I'm like way beyond full time. The amount of loans that we do, last year we did 215 loans for $57 million in loan amount. We work around the clock for these clients, Monday through Sunday. I have clients call me on the weekends,
late
Sunday evenings.
People
never stop.
Offers and have short turnaround timelines that could end at like 10 p.m. So, sometimes we're up 10 or 11 at night. but it's worth it because we'll know if we can help our client get that house, that everyone's going to go to sleep feeling much better that night, versus you wait to the next day. Oh no, there's another offer now, and everything's just like, all right, we got to refigure this out.
Then your client's upset because they feel they missed it because of you, and so I mean,
time is of the essence of real estate, which also adds to stress. But having experienced professionals with teams, which we both have, make it much easier to help people in these type of circumstances.
Yeah, no, I mean, you're right in mentioning our teams. I mean, there's no way either of us could do the volume that we do a team. I mean, I have a team, I have an office manager, Lori Coppinger, who keeps basically the train on the track. She helps coordinate everything for our entire branch. And then I have, 3 other people just specifically on my team alone to help, from start to finish, whether it be getting pre-qual letter, helping them get pre-qualified, help answer questions for clients. There's no way I could do it all by myself. And I know you couldn't do it without your team too. So, it's important we rely on our team and our people. And, I'd venture to say that you and I have probably 2 of the best teams in the business. I mean, I'd put my team up against just about anybody when it comes to knowledge, service level, just all around. I mean, we both, you guys rock. And I know you guys wouldn't be rocking if you didn't have the best lender in town, right?
it helps for sure.
I'm just kidding, man. No, but it's everything. Everything happens for a reason.
Well, like when we recommend you and our client has a good experience that reflects positively on us. If we recommended someone and they didn't have a good experience, that would come back on us, and they may not want to recommend us.
No doubt.
So
right.
The people we recommend, it's for a reason. It's because we have a high level of confidence our clients are going to have a good experience, because the majority of what both of us do is repeat and referral. So, and then just me personally, I'm kind of a perfectionist. Like, my standards are probably way too high with everything, but I think it shows.
Well, it absolutely shows. I'm the same way. I mean, I probably am unlike some other lenders in the sense that I don't ever shut down. My phone never stops, and I always pick up. And if I don't, I'll call you back very quickly. And you're the same way. And that's when it comes down to it, that's, I think, a lot of our success is that we probably take it. I don't know. I mean, like you just said, you're a perfectionist. So am I. I mean, I like to do business a certain way, and I guess the way my expectations are is the way I've set the tone for my team, and that hey, this is how we have to run, and this is I mean, it's proven success. You and I are both we've done very well in our careers, and we keep getting the referrals because we take care of these people. We go above and beyond for them, and so you're right. It shows that when we care as much as we do, and the clients see how much we care, they have no issue referring us to friends and family, and that's how we, you and I both are paid by referral, and we love referrals, and we thank God for them, and so
So, long story short, if you have any real estate related questions, you can call me. Me and my team will be happy to help. It's Alex Glaser and the Glaser Group at Long & Foster Realtors. I'll put our contact information up at the bottom. Philip Coon, branch manager, CNF Mortgage, will also put his contact info at the bottom, but I know it's philipcoon.com. Thank you so much for everyone who's listened, and I hope you have a great rest of your day.
Yeah, thanks, guys. Thanks, Alex.